What if I told you there was a way to get paid before payday? Sounds pretty good, right? In today's world, financial flexibility is more important than ever. Unexpected bills pop up, life throws curveballs, and sometimes, your next paycheck just feels a little too far away. That's where services like Beforepay come in, offering a helping hand to bridge that gap. We've all been there, that feeling of dread when an urgent expense hits, and your bank account is looking a bit sparse. Maybe your car needs an unexpected repair, or a last-minute opportunity arises that requires a quick cash injection. For many, traditional loans or credit cards aren't always the most accessible or affordable options. They often involve lengthy application processes, credit checks, and interest rates that can add significant financial burden. This is precisely the kind of situation where a service designed for early wage access can be a game changer. It's about providing a quick, convenient, and more importantly, responsible way to access a portion of your earned wages when you need it most, without getting caught in a cycle of debt. Now, you might be thinking, this sounds too good to be true. What's the catch? And how exactly does it work? Specifically, when it comes to Beforepay, one of the most common questions people have is, how many payments do they require? It's a crucial question because understanding the repayment structure is key to using such a service responsibly and effectively. Unlike traditional loans that often have multiple installments stretching over weeks or months, Beforepay operates on a much simpler, more streamlined model. When you get a cash out from Beforepay, you're not entering into a long-term repayment plan. Instead, the repayment is typically structured around your next payday. Here's the core of it. Beforepay generally requires one single payment to settle your cash out. This payment is automatically deducted from your nominated bank account on your chosen repayment date, which is usually aligned with your next salary deposit. The idea is to help you out in the short term, and then for you to repay the amount, along with a small fixed fee, when your income comes in. It's important to understand that Beforepay is designed for short-term financial needs, not as a long-term borrowing solution. The one-payment model reinforces this. It's not about installment plans that could potentially tie you down for extended periods. It's about getting you access to your money now, and then you settling the advance when your regular income arrives. This simplicity is a major part of its appeal, removing the complexity and ongoing commitment often associated with other forms of credit. Of course, to ensure a smooth experience, it's always recommended to ensure you have sufficient funds in your account on the repayment date. Beforepay also offers features that allow you to adjust your repayment date if needed, providing a degree of flexibility should unexpected circumstances arise. However, the fundamental principle remains, a single, straightforward repayment tied to your next payday. This clear and concise repayment structure is what sets Beforepay apart and makes it a convenient option for managing those immediate financial needs. With that said, thanks for watching and until next time.